We're looking at between $2 to $4 trillion in commercial real estate debt coming due this year and next year. There's going to be defaults. We're forecasting an office building bust that's going to start bringing down those banks. Let's go back to 2023. 3 banks went down: Conman Valley Bank, First Republic, and Signature Bank.
Credit Suisse. Some Swiss bank went down too.
That went down too. And
Yeah.
what happened to the equity markets? Boop, they went down. And what happened to the gold? Shot up. We're in that same situation, but many, many times worse. And it's not
And
only in the United States.
the gold price is not a flash in the pan. The precious metal has been seeing consistent price increases in recent years. Its price is up 77% over the last 5 years and 564% over the last 2 decades. Its price has been driven up by massive demand from central banks, particularly from China, inflationary pressures in the U.S., and an extended period of volatility that saw pandemics and war rock the markets. The Federal Reserve announced on Wednesday that it would be testing big banks against heightened stress in commercial and residential real estate markets as part of the U.S. Central Bank's annual stress tests. American trend forecaster Gerald Celente expresses strong bullish sentiment on gold. Celente forecasts a major commercial real estate crisis, leading to defaults and bank failures. He compares this to the 2023 banking collapses, noting that while markets fell, gold surged. According to him, the rise in gold prices is driven by uncertainty in the investment sector, particularly high stock valuations and the rapid growth of AI, which he believes is making investors anxious. Despite the hurdles, the AI startup market is growing fast, with a 40% compound annual growth rate from 2021 to 2028. Startups backed by venture capital for AI projects do 50% better in revenue. As the AI market for startups grows 20% each year, it's key for entrepreneurs to tackle these challenges and use AI for success. Regarding artificial intelligence, Celente notes the media's unusual openness in reporting its risks. Drawing parallels to the dot-com bubble, he warns that overvalued AI ventures may collapse, leaving significant losses. A Wall Street Journal article warns of the U.S. debt crisis, which could exceed $220 trillion. Celente agrees it's unsustainable and questions if Trump's pro-crypto stance might shift, allowing a central bank digital currency. Gold newsletter editor Brian London told MarketWatch that dollar strength, rising treasury yields, and the surging price of gold are all evidence of this global concern about the U.S. fiscal situation. Now, we present the clips of Gerald Celente's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
And we're still very bullish on gold because it's a safe haven asset, and there's a lot of concern going on. One of our top trends for 2024 was we said it would be a golden year for gold, and gold prices went up 25% last year. I didn't think gold prices would go up as high as they are right now. And this is beyond, but the reason is there is a lot of concern going on, particularly in the investment group. They know that the valuations of the stocks are quite high. And this AI is very, very concerning to a lot of people that are looking at it very deeply. And I have to tell you, I'm surprised at the openness in a lot of the reporting going on in the mainstream media, giving the facts about the true dangers of it. Because usually they try to cover it up, not to freak people out. But they're putting a lot of facts down that are very important for people to understand that's going on with this AI world. And again, here's your cover. This is what we wrote, by the way, back in 1999. Dot-com overload will short-circuit many high expectations for huge profits in internet commerce, entertainment, and the wide array of dot-com services. Following the holiday season, many of today's high-flying internet stocks, the hottest IPOs, and newly emerging IPO wannabes will have begun their deep descent from their overvalued heights. And that's exactly what we have now. Newly emerging IPO wannabes. Inventing stuff that's brand new, that they don't know where it's going. And these venture capitalists and a lot of the others invested a lot of dough in this, and they're going to lose it. We're looking at between $2 to $4 trillion in commercial real estate debt coming due this year and next year. There's going to be defaults. We're forecasting an office building bust that's going to start bringing down those banks. Let's go back to 2023. 3 banks went down: Conman Valley Bank, First Republic, and Signature Bank.
Credit Suisse. Some Swiss bank went down too.
That went down too. And what happened to the equity markets? Boop, they went down. And what happened to the gold? Shot up. We're in that same situation, but many, many times worse. And it's not
And
only in the United States. This is an article from the Wall Street Journal on February 3rd. Wall Street frets over U.S. debt plan. It's exactly what you're saying. You said 36 trillion. When you look at the numbers behind what they have to pay out in the future,
oh, right.
what is it? About 220 trillion?
Yeah.
So
That's
one of the
off
things
balance
that
sheet. Yeah, it's called.
there's no way, the other thing, Trump is very pro crypto. He says he's not going to do it, but, he does change his mind with things. Could we see a central bank digital currency coming?
Based on fundamentals, Celente warns of a potential dot-com bust 2.0, comparing AI's rapid investment surge to the late 90s internet bubble. He notes that many AI startups, heavily funded by hedge funds, could collapse due to cost-cutting innovations. Despite Trump's efforts to boost the economy, an AI-driven crash remains a major wildcard. Since taking office on January 20th, President Trump has revoked former President Joe Biden's 2023 executive order on the technology, set in motion a repeat withdrawal from the Paris Climate Agreement, and faced congressional calls to consider new export controls on AI chips to counter rival China. AI is currently venerated by capitalists and politicians around the world as the future, and on that basis, the Magnificent Seven managed to round up yet more masses of investor funding to shore up their balance sheets and keep going to get through the next round of updates and releases. Furthermore, Celente points to NVIDIA's recent stock drop and the $600 billion market loss as signs of instability. He believes a major crash could be looming with many unproven companies rushing into AI. Let's get back to the interview.
Trump was very fortunate. He came from a money group over there, so he had a good start. But there's no question that he's going to do what he wants to do. Again, the good and the bad of it. I'm not in favor of some of the things that he does, particularly on the geopolitical side. On the economic side, he is going to do everything he can to keep pumping up the economy. To us, there's no question about it. And that means that, but there's the wild cards, and you can't ignore the wild cards. And one of the big wild cards that was just dealt last week was the DeepSeek card and how this whole AI thing is going. And we're very concerned that is there going to be a dot-com bust? Because that to us is a reality. And by the way, this was a Trends Journal back in 1999 when it was a quarterly. And there's the article right here, .com this. I forecast the .com bust. I said it would happen by the second quarter of 2000. It's right here. It did. It happened in March. Now let's go back to the AI. Trends are born, they grow, they mature, reach old age, and die. The AI has just been born, what, 2 years ago, 3 years ago? So we call the .com bust because all this money was flowing into these. Remember, that's the beginning of the internet revolution.
Right.
It didn't happen, until like the early 90s. And so we said, this thing's going to go down. The same thing happened with AI. Everybody, not everybody, but a load of the companies, the hedge funds, et cetera, invested hundreds of billions of dollars into this AI and these startup companies. The startups, and all of a sudden they come out with this DeepSeek or Deep Freak, I'm not sure. They come out with, we could do this a lot cheaper. It's not going to cost $100 million. It's going to cost $6 million.
That's a
and
Chinese.
all those power plants that we're going to build because we have to get these big chips. No, we don't need these big chips. This is very important for us to watch as trend forecasters because there could be a lot of defaults on these startup companies, and we could have a dot-com bust 2.0. So going back to the wild cards, as much as Trump is going to do to try to keep this economy going, if that wild card is dealt as a dot-com bust, it's going to be a tough trip. Actually, this week we're doing a whole section on it. It can well happen. This is very serious. I mean, you look at that NVIDIA. What did they lose? Their stocks last week went down 17%, and a whole load of other companies went down with it, where they lost like $600 billion. And they rebounded a little bit. But this is very serious because, again, the trend has just been born. And you have a lot of these startups that they invested all this money in. And again, also going into the building all of these resources to create more energy to build the chips. You're not going to need these big advanced chips, is what we're seeing now. Again, as we said from the beginning when AI happened, This is just going to keep expanding. This is just the beginning of it. It's just going to keep growing. But we warned from the beginning to watch out for overinvestment into startup companies that are trying to get in the game, that are inventing something new, and they don't know how to invent it when it was old. That's our concern. So we think that this is just the beginning of that could very well be a dot-com bust.
For some time, the gold price has been ascendant over stubborn inflation and geopolitical uncertainty, and has been given a fresh boost by volatility emerging from the U.S. election. Analysts think gold is poised to continue to do well, though some warn the rally could tail off toward the end of the year. Given the rising risks in AI investments, commercial real estate, and U.S. debt, could gold and other tangible assets become the primary refuge for investors in the coming years? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.